Yeah, fine. Good morning to one and all present here. Today we are going to say about the banking company accounts. Introduction. Just like other commercial business, banking is also a business. It receives certain income as well as it spent certain expenses. In an earlier stage, it did a primary functions, that is accepting deposit and lending money, other services, that is locker services and other services they did on behalf of the customer. After the emergence of e-banking, they did n number of services to the customer. Through e-banking, the customer make all the payment. On behalf of the customer, they purchase the share. Here, the banking company, they have a income as well as certain expenses. Income in source of, if they provide loan to the customer, for that they are charging certain interest, that is income for the bank. And for deposit, the banker need to provide interest to the customer, that is expenses for the bank. So we need to prepare. To know the profit or loss, we need to prepare profit and loss account. And to know the status of a banking business, we need to prepare a balance sheet. Here, the banking company is regulated by the Banking Regulation Act 1949, Section 5B. As per Banking Regulation Act, the banking company accounts, it have a structure and it possesses certain schedule, that is Schedule B. Schedule B possesses profit and loss account. To identify the profit and loss account is segregated with certain income and expenses. The first category, income earned. The banker can earn the income from the loan provided to the customer. It is come under Schedule 13. And other income, commission received, brokerage received. They did certain services to the customer, from out of which they receive certain income, that is called as other income. And Schedule 15, expenses expanded. The banker need to pay interest for the deposit, fixed deposit, term deposit. For that they need to pay interest to the customer. And operating expenses, just like other business expenses, the banking company also have operating expenses, rent paid, telephone bill paid, auditor charges, legal charges. If we total the income and total the expenses, income minus expenses, that is profit of your business. And Schedule A, it holding balance sheet. The balance sheet which state the status of your business. Schedule 1, capital of your banking company. There is a two division, liability and asset. Under liability, the capital comes under Schedule 1. And reserves and surplus, Schedule number 2, reserve and surplus profit. Deposit which hold fixed deposit, term deposits. And borrowing, the banker borrowed money from other bank, either RBI or other financial institution or other bank. And other liability, the bills payable and provision for bad debt, provision for doubtful debt, all the liability comes under Schedule number 5. On the asset side, cash come under Schedule number 6. Cash in hand as well as cash with RBI. And Schedule number 7, bank and money call at short notice. Bank. Here the banker, they invest money, they hold money in some other bank. Some other bank borrowed money from the bank. That is comes under Schedule number 7. And investment. The banker can invest money in share, government securities, bond and debenture. Advances, Schedule number 9. Advances, loan and advances, cash credit, bank overdraft. And fixed deposit, Schedule number 10. Land and building, machinery, computers and other parts. Other asset, tax paid in advance. All other assets come under schedule number 11. Contingent liability, bill received on behalf of customer, bill endorsement, all these items come under contingent liability. Through the profit and loss account, we know the profit or loss gained from the banking business. Through the balance sheet, we know about the status of a banking company.